Hello traders, Gary Wagner here, just about noon in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is January the 3rd, 2020, and this is the Daily Report for Gold and Silver, our weekend review. In fact, the first weekend review of the year and the decade, and what a way to start this out. Military action last night by President Trump has caused gold to rise tremendously, has caused the stock market to sell off pretty strongly, although it did recover. But most important, it has set a scenario into play that could take a while to work itself out. And this scenario could most certainly take gold substantially higher. We'll talk about that as we pull up our pricing board, as well as our technical studies. We'll also talk about our current trade. But first, to the price board. We are looking at gold, the most active February contract, currently up $27.10. That is correct, at $1,555.20, considering that the high today was $1,559.60. We are just a couple of dollars shy of that high, and I doubt that any traders really want to be short gold as we go into a day and a half where it won't trade, and any escalation due to the action last night is possible. We are long from $1,507. We sent out a trade alert this morning, raising our stop. We'll talk about that in a second. Platinum up a few dollars, $2.20, $9.87. Palladium up 1.51%, almost $30 at $1,957. Silver up a meager 5 cents on the day, and the dollar slightly higher, but in essence unchanged. Of course, the big news was the U.S. equities markets. It was down about 300 points, closed down about 233 points. Let's take a look at our technical studies, talk about our trade, and talk about our strategy, more importantly, as we go into the new year and new decade. This is one of the largest single-day moves we have seen in quite some time, especially to the upside. We have seen it to the downside, but we've got a $27 gain today, $1,555. Of course, traders, if you recall, day of Christmas, we had seen on the previous day the market really finally break above this bull pennant that we identified. And then when we had the market really take off the day following Christmas, meaning when it reopened overseas, we saw that it not only had made it over the 50-day, over the pennant formation, but over the key 100-day moving average. We took a stab at the market, traders getting in. We got in right here at 1507. Now, that being said, this market has moved up substantially. We did raise our stops today, but we are also close to our first initial target, where I talked about the fact that we could see some kind of resistance come in. Because if you recall, I talked about where we could actually see some resistance. Of course, the very first point that we looked at was $1,520. But when we look at this top, we can also see that there have been quite a few occasions in which the market ran above it, but had a failure to take it out on a closing basis. And I'm talking about right here as well as here. The next price point that I talked about, approximately $1,540, right in here. And we talked about the fact that that was a top that came in. And then, of course, above that was the yearly high, and that is this one at around $1,565. The question is, how will the market react if it continues to go up? And I absolutely believe it will when it reaches these points. Will that cause traders to take some short-term profits, or will we see this market barrel right through that? Now, if it barrels through this particular price point, it is because the action that happened last night with the drone attack, and that has escalated tension in the Middle East. Technical marks are not going to stop this market. It is going to continue to barrel all the way through this without question and very easily. If there's a lull or a pause in the activity as the market approaches this, we could see the market backlash. And that's why when I sent out the trade report this morning and I raised our stops, I also talked about to watch this area to see if it reaches it and backs down, that you might want to consider pulling profits. However, that being said, this market obviously is headline driven. There's no question about it. So where could this market go to if, in fact, we see an escalation in the Middle East tension? If we do that, the marks that I'm looking at right now have to do with Elliott Wave. I am looking at 1635 as high as 1760. We have revised that due to the nature of what has transpired in the last 24 hours. Obviously, if the market continues to rise, let's see how it reacts at 1600, but I believe that it has the potential to do that. 1640 is certainly not out of the question. That being said, maintain your current long position. Maintain your stop. We moved that up today. Look to see how the market reacts on Sunday. If we see it fly through the area of 1565, if we see any kind of pause in the action, and that I actually doubt, because if Iran hasn't retaliated, people will wait for some sort of retaliation, and if they have, the gold market will react to it, and we could certainly see 1600 at least challenged in the next week. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.